Welcome to our deep dive today into the Indian economy.
All right.
We'll be looking at a really fascinating report from CareEdge,
Yes.
formerly known as Care Ratings, and it's November 2024. So by the end of this deep dive, you should have a really solid grasp of all the major things that are happening in the Indian economy right now.
Yeah, and I think what's really fascinating here is that there's a real mix of signals right now.
Okay.
Some that are positive and some that are a little bit more challenging.
Right.
But I think it's worth starting with some of the sort of glimmers of hope that we see.
Okay, so where's the good news?
Well, the high-frequency economic indicators from October 2024 showed some improvement, actually, after a bit of a dip earlier.
Right.
So things like GST collections and e-way bills, which give us a sense of business activity, are trending in the right direction.
That's encouraging. Anything else?
Yeah. The purchasing managers' indices for both manufacturing and services bounced back in October.
Okay.
So the manufacturing PMI climbed to 57.5.
Wow. And the services PMI reached 58.5, which is actually above its long-term average.
So when we see that, what does that actually tell us?
Well, PMIs measure things like output new orders and employment. So a rising PMI generally suggests that businesses are feeling more confident.
Right.
And that activity is picking up.
Makes sense. But you did mention that there are challenges too.
Right.
What's the catch?
Well, public capital expenditure from the government has been a little bit weaker than expected.
Okay.
In the first half of fiscal year 2025, which started in April.
Okay, so why is that?
It's likely due to election-related restrictions earlier in the year. Governments often become a little cautious with spending during those periods.
So is this likely to be a temporary blip then?
Well, the report suggests that public Capex could pick up steam in the second half of the year.
Okay.
But it is something to keep an eye on. All right, speaking of investment, what about private sector Capex? Are businesses feeling bullish?
That's where it gets interesting. While public Capex has been sluggish, corporate Capex is showing some promise.
Really? Can you elaborate a little bit on that?
Yeah, just to illustrate this contrast, Capex by the central government and major state governments fell by 15.4% and 10.5% year-on-year, respectively.
Wow.
In the first half of FY25.
Okay.
But on the flip side, order books for companies in capital goods and infrastructure, especially roads, are growing.
So companies are getting more orders, which means they're planning to invest more.
Exactly. Order books for capital goods companies jumped by 23.6%.
Wow.
In fiscal year 24, accelerating from a 4.5% growth in the preceding 4 years. And even in the first half of fiscal year 25, we've already seen a 10.3% increase compared to the end of fiscal year 24.
That's a pretty stark difference.
Yeah.
What explains this divergence between public and private investment?
Well, I think what this suggests is that businesses are perhaps more optimistic about India's long-term growth potential than the government, which could be a really positive sign for future investment.
Right.
They might be anticipating an uptick in demand as the global economy stabilizes. Or perhaps they're responding to government incentives that are encouraging investment.
Okay, so we've got this really interesting kind of dynamic.
Yeah.
On the investment front, what about consumer demand then?
Well, demand is crucial for any economy.
Right.
And right now we're seeing a fascinating divergence between urban and rural India.
Tell me more about that.
So urban demand appears to be slowing down. Passenger vehicle sales, which are often a big-ticket discretionary purchase, contracted in the second quarter of fiscal year 25.
Are there any numbers that highlight that slowdown?
Yeah. Passenger car sales shrunk by 18.5%. In the first half of fiscal year 25.
Okay.
This could indicate that urban consumers are feeling a bit cautious about the economic outlook.
That's a pretty substantial drop.
Yeah.
What about rural demand? Is that holding up?
Rural demand seems to be more resilient, with sales of two-wheelers and three-wheelers showing strength. These vehicles are more affordable and practical for rural areas, where you might need to navigate potholes and things like that.
Yeah, absolutely. So it's a tale of two Indias.
Yeah.
With different consumption patterns driving demand in urban and rural areas.
Right.
What else is shaping the demand landscape?
One factor that's impacting demand, especially in rural areas, is inflation.
Right. Inflation is a global concern right now. How's India faring on that front?
CPI inflation hit a 14-month high of 6.2% in October 2024.
Ouch, 6.2% is a pretty significant jump.
Yeah.
What's driving this surge in prices?
Well, food inflation is the primary culprit.
Okay.
And this is particularly worrisome because it disproportionately impacts lower-income households who spend a larger portion of their budget on food.
Right. So those rising wages that we were talking about in rural areas are basically being eaten up by this high cost of food.
Right. It's squeezing their budgets.
Exactly. What are some of the factors behind this stubborn food inflation?
It's a mix of things. Supply chain disruptions, partly due to global events, rising energy prices, geopolitical tensions.
It sounds like a complex web of factors. Is this inflation spike likely to be temporary, or are we looking at a more persistent problem?
That's the million-dollar question.
Right.
It really depends on how these various factors play out in the coming months.
Okay, so inflation is a key factor to watch, especially for its impact on those kind of diverging demand dynamics between urban and rural India.
Absolutely.
Now, before we shift our focus to India's external sector, I want to kind of pick up on something you mentioned earlier about those weakening passenger car sales. What does this tell us about consumer sentiment in urban India?
Well, it could be a sign of growing caution among urban consumers. You know, car purchases, especially in India, are often seen as a significant financial commitment. So if people are hesitant to make those big purchases, it could signal concerns about job security or the overall economic outlook.
Yeah, because it's such a commitment and like a big purchase that you're kind of really showing your confidence in the future. So if those sales are weakening, it's definitely not a good sign.
It's something to pay attention to.
Yeah, absolutely. And this cautious sentiment could have broader implications for other sectors of the economy that rely on consumer spending.
Yes, it's all interconnected.
Okay, that's a great point. We'll delve into those implications later on. But for now, let's shift gears and talk about how India is interacting with the rest of the world. What's going on there?
India's external sector is always worth paying attention to. And there are some notable trends emerging.
I'm all ears. What are those trends?
So merchandise exports, meaning the goods India is selling to other countries, have been losing momentum. Meanwhile, imports, the things India is buying from the rest of the world, remain quite strong.
So India is buying more than it's selling. What's the impact of that?
Well, this is widening India's trade deficit, meaning the gap between imports and exports is growing. And this can put downward pressure on the Indian rupee, or INR.
Speaking of the rupee, it's been hitting record lows against the US dollar lately. What's driving this depreciation?
It's a combination of factors. We have global economic uncertainties, geopolitical tensions, a strengthening U.S. dollar, which makes other currencies appear weaker in comparison.
So it's kind of a global ripple effect impacting the rupee.
Yeah, you could say that.
Okay. Are there any India-specific factors contributing to the rupee's woes as well?
Yes, there are.
Okay, what are those?
Foreign investors have been pulling money out of Indian markets, which reduces demand for the rupee.
And why are these foreign investors heading for the exits? Is it just the global uncertainty?
That's certainly part of it. But some investors are also shifting their focus to Chinese stocks, which have gotten a boost from new economic stimulus measures announced in China.
So it's a bit of a competition for those investment dollars.
Precisely. And then we have investors who are concerned about India's domestic growth prospects. Given some of the challenges we've already discussed, inflation and the slowdown in urban demand.
So it's a confluence of factors, both global and domestic, that are impacting the rupee. Now, within this context of global uncertainty and a weakening rupee, there's one development that really stands out.
You're talking about the record-breaking outflow of foreign portfolio investments, or FPIs, in October.
Exactly what happened there.
In October 2024, FPIs pulled out a record USD $11 billion from Indian equities.
$11 billion.
That's the highest level of outflows we've seen in 4 years.
That's a huge amount of capital leaving the country. What's behind this dramatic exodus?
Well, it seems to be driven by a combination of those global uncertainties we discussed, the allure of Chinese stocks, and some specific concerns about India's own economic trajectory. Investors are looking at things like subdued corporate earnings, high valuations in the Indian market, and those worries about India's growth prospects.
So it's a bit of a wake-up call for India.
Yeah, I think so.
A reminder that even with its vast potential, it needs to keep its economic house in order to attract and retain those crucial foreign investments.
I agree with that.
So we've got this really intricate dance between inflation, the rupee trade, and investment.
It's all interconnected.
All playing out against the backdrop of this shifting global landscape.
Absolutely.
It's a lot to take in, but I'm sensing there's even more to unpack in this report.
There is.
What else have they uncovered?
They've taken a particularly close look at rural consumption patterns and the impact of food inflation.
Why is that so important?
Because food prices have a disproportionate impact on rural households.
Right.
Who typically spend a larger portion of their income on food.
Right, compared to their urban counterparts.
Exactly.
So what did they find?
Well, while overall food inflation has shown some moderation, certain categories, like vegetables, pulses, and cereals, remain stubbornly high.
And this is posing a real challenge for rural demand.
Yes.
Even though rural wages are rising.
Exactly. Elevated food prices eat into disposable incomes, leaving less money for other goods and services.
So it's a bit of a double-edged sword for rural consumers.
Yeah.
They're seeing wage growth.
Right.
But those gains are being eroded by this high cost of food.
Absolutely.
This raises an important question, actually, for our listeners.
Okay.
How has food inflation impacted your budget? Have you had to cut back on other expenses to make ends meet?
It'd be great to hear.
Yeah, we'd love to hear your experience.
Yeah.
Now, before we kind of go further into the specifics of the report, let's kind of pause and recap what we've learned so far.
Sounds good.
We've covered a lot of ground.
We have?
Already.
Yes.
We've seen some positive signs, like the rebound in PMIs.
Yes.
But we've also highlighted some major challenges,
right,
including persistent inflation and those record FPI outflows.
Right. And we've also explored those contrasting demand dynamics between urban and rural India, where we see those starkly different consumption patterns playing out. And of course, we can't forget the impact of global events on the Indian economy. So it's a complex, ever-evolving story with no easy answers.
Yeah, it's hard to predict anything with certainty.
Right. But I'm guessing CareEdge has some thoughts on where things might go from here.
They do. They've actually made some forecasts for key economic indicators.
Really?
Based on their analysis.
Oh, wow.
Which we'll delve into in the next part of our deep dive.
Okay. Sounds good.
Welcome back to our deep dive into the Indian economy. Before we kind of jump into those forecasts, you might be wondering about the historical context of these FPI outflows.
Right.
You know, how unusual is it for foreign investors to pull back so dramatically from India?
Yeah, that's a great question. India has been seen as like this attractive investment destination.
But it's also experienced these periods of volatility in the past.
Absolutely. For instance, back in 2013, when the U.S. Federal Reserve hinted at tapering its quantitative easing program, there was a similar kind of knee-jerk reaction. FPIs pulled out billions and the rupee depreciated sharply.
So are we seeing history repeat itself?
It's certainly possible.
Okay.
The global investment landscape is constantly shifting, and India is not immune to those changes.
What makes the current situation particularly noteworthy then?
Well, I think it's the magnitude of the outflows, coupled with the underlying reasons behind them. You know, those concerns about India's growth prospects, the subdued corporate earnings and high valuations in the market. All of these contribute to a sort of cautious outlook.
So what does this mean for policymakers?
Well, I think it highlights the needs for ongoing reforms to improve the ease of doing business, to attract more stable long-term investments, and to tackle the structural issues that might be holding back India's growth.
So India can't afford to be complacent.
No.
Especially in this world where capital can move so freely.
Exactly. Now let's address the other pressing issue we touched upon earlier. The weakening rupee. What are the potential consequences of a currency losing value?
Well, for starters, it makes imported goods more expensive.
Yeah, that's right. Everything from electronics to manufacturing components becomes pricier, and this can feed into inflation, which, as we've already discussed, is a major concern.
So a weaker rupee could create this kind of vicious cycle, making it harder to control inflation.
It certainly can. Are there any upsides to this?
That's a good question. I guess there must be some.
There can be a weaker currency can actually make Indian exports more competitive as they become cheaper for buyers in other countries.
So it could potentially boost those lagging exports and help narrow the trade deficit.
Precisely. But it's a balancing act. If the rupee weakens too much, it can erode investor confidence and make it harder for Indian companies to repay debts in foreign currencies.
Yeah, it sounds like a tough situation.
It is.
For the Reserve Bank of India to navigate.
Absolutely. They've been intervening in currency markets to try and smooth out the rupee's volatility.
Right.
But these interventions have their limits. Ultimately, the rupee's fate will depend on this complex interplay of domestic and global factors.
Yeah, this all feels incredibly interconnected.
It is.
Inflation, the rupee trade, and investment. It's a lot to wrap your head around.
And that's what makes this CareEdge report so insightful.
Okay.
It helps illuminate these interconnections and the complexities of navigating this economic landscape.
Right. And before we kind of get into their forecasts, I'm curious about one specific detail you mentioned earlier. Their deep dive into rural consumption patterns and food inflation.
Yes. They uncovered some fascinating data there. Remember how we discussed the contrasting demand dynamics between urban and rural India?
Yeah, the slowdown in passenger car sales versus the resilience in two-wheeler and three-wheeler purchases.
Exactly. CareEdge dug deeper into rural consumption and found that while overall food inflation has shown some moderation, certain categories like vegetables, pulses, and cereals remain stubbornly high.
So even though rural wages are growing faster than inflation, those gains are being offset by these high food prices.
Precisely. It's creating a difficult situation for rural households who have less disposable income left for other goods and services.
It's a crucial point that policymakers need to consider.
Right.
Are there any steps being taken to address this?
The government has released some buffer stocks of essential commodities like grains and onions to increase supply and hopefully bring down prices.
So they're trying to intervene and stabilize the market.
Yes, but these interventions can only go so far.
Right.
Ultimately, tackling food inflation requires a more comprehensive approach that addresses both supply-side and demand-side factors. This could include improving agricultural productivity, strengthening supply chains, and addressing any underlying issues contributing to demand pull inflation.
Sounds like a multi-pronged challenge.
It is but one that India needs to tackle head-on for sustainable and inclusive growth. Now let's get to those CareEdge forecasts you mentioned earlier.
Okay.
They paint an interesting picture of India's economic future.
All right, let's hear them. What are their predictions for key economic indicators?
Well, they project GDP growth to be around 7% for fiscal year 25.
7%? That's still quite strong considering the global economic headwinds.
It is. However, they also predict that average CPI inflation will hover around 4.8% for the fiscal year.
So inflation is expected to cool down a bit, but still remain a concern.
Yes. What about India's current account deficit?
Yeah, what are they predicting there?
They anticipate it to be around 1.3% of GDP, manageable, but something to monitor closely.
And what about the fiscal deficit? Is the government on track with its budget targets?
They expect the fiscal deficit to come in around 4.9% of GDP, in line with the government's target. This suggests that fiscal consolidation plans are being adhered to.
That's good news. What about interest rates in the currency? Any predictions there?
Well, they project that 10-year government bond yields, which are a benchmark for borrowing costs in India, will range between 6.6% and 6.7% by the end of fiscal year 25. This indicates that borrowing costs will likely remain relatively elevated.
And for the USD-INR exchange rate?
They project it to be around 83.5 by the end of the fiscal year. This means the rupee is expected to weaken further, but stabilize somewhat from its recent lows.
So these are some pretty specific forecasts. Do you think they're reliable?
Well, it's important to remember that forecasts are just that, forecasts. The actual outcome will depend on how those complex interconnected forces we've been discussing play out in the coming months.
Right. Fair enough.
Yeah.
But they do give us a framework, I think.
They do.
For thinking about these potential scenarios that might unfold.
Exactly. They also remind us that the Indian economy is dynamic and constantly evolving with its own unique set of challenges and opportunities.
So taking all of this into account, what do you think is the most likely scenario for the Indian economy in the coming months?
While it's impossible to say for certain, I believe India will likely continue on a path of moderate growth. We'll probably see continued expansion, but at a slightly slower pace than in recent years.
And what about inflation and those global uncertainties that we were talking about?
Well, inflation will likely remain a concern, but I expect it to gradually moderate as supply-side pressures ease. The global uncertainties, on the other hand, will remain wild cards. The U.S. election results, China's economic trajectory, and global risk appetite will all play a part.
So a bit of a mixed bag then.
Yes, but even amidst the volatility, there are reasons for cautious optimism.
Okay.
India has a young and growing population,
Yeah.
a burgeoning middle class, and a government committed to reforms.
So there's still a lot of untapped potential.
Absolutely. And that's what makes the Indian economy so fascinating to watch.
Yeah, we've covered a lot of ground in this deep dive.
We have.
From PMI data to inflation worries and the impact of global events. We've even delved into the intricacies of the banking sector.
Yes.
Now, before we move on to the final part of our deep dive, I want to ask you, what's the one element of the banking sector that stands out to you from this CareEdge report? We've talked about government spending and private investment and consumer demand.
Yeah.
But the banking sector is a crucial piece of the puzzle we haven't explored yet.
Right.
What can you tell us about that?
Well, what's fascinating here is that despite all the uncertainties we've discussed, liquidity conditions in India's banking system remain quite comfortable.
Okay, what exactly does that mean?
It means there's ample cash available for businesses to borrow and invest. In fact, the liquidity surplus actually increased to 2.3 trillion rupees in early November, up from 1.5 trillion at the end of October.
So where's all this extra cash coming from?
Well, several sources contribute to this. Government spending tends to inject liquidity into the system. Additionally, we've seen some maturing government securities and redemptions, which puts more money back into circulation.
And I imagine the Reserve Bank of India, the RBI, is keeping a close watch on all of this.
Absolutely. They've been conducting what are called variable rate reverse repo, or VRRR auctions.
VRRR auctions. That sounds a bit complicated.
Yeah.
Can you break it down for those of us who aren't finance experts?
Think of it like a sponge.
Okay.
When there's too much liquidity sloshing around in the system,
the
RBI uses these VRR auctions to soak up some of that excess cash.
So it's a way to kind of prevent inflation from getting out of hand.
Exactly. It's all about maintaining a balance, ensuring there's enough liquidity to support economic growth, but not so much that it fuels inflation.
Yeah, it sounds like a delicate balancing act.
It is.
Now, while we're on the topic of the RBI, everyone's always curious about what they'll do with interest rates.
Yeah.
Does the report offer any insights on that?
Well, CareEdge notes that the yield on the 10-year Indian government security, which is a key benchmark for borrowing costs in India, has been on the rise.
That's not surprising, given that inflation is still above the RBI's comfort zone.
Right. And they point out that this upward trend in Indian bond yields is partly mirroring what's happening globally.
Yeah.
With U.S. Treasury yields also climbing.
So it's a global trend influenced by factors like we talked about earlier.
Yeah.
Like, the U.S. elections and potential shifts in U.S. monetary policy.
Precisely the uncertainty surrounding these events is making investors a bit jittery, which usually translates to higher borrowing costs as lenders demand a larger premium for the risk they're taking.
That makes sense. So what does CareEdge predict the RBI will do at its upcoming December meeting?
Given the persistent inflation, they believe the RBI will likely remain cautious and keep interest rates on hold for now. They've actually pushed back their expectations for a rate cut to February 2025.
So no immediate relief for borrowers?
Not likely, at least not in December.
Right.
A lot hinges on what happens with food inflation in the coming months. If food prices start to moderate, it could give the RBI more leeway to consider a rate cut.
It seems like food inflation is a crucial variable in all of this.
Absolutely. It's something that policymakers, businesses, and consumers alike are watching very closely.
Well, we've covered a lot of ground in this deep dive into the Indian economy. We explored those hopeful signs of the PMI data, the persistent worries about inflation, and the significant impact of global events.
We did.
We unpacked those contrasting trends in urban and rural demand, analyzed the dynamics of public and private investment, and even navigated the complexities of the banking sector and interest rate policy.
Absolutely.
It's been quite a journey.
It has.
I feel like I've gained a much deeper understanding of this complex and fascinating economy.
I agree. It's a constant reminder that economics is rarely about simple cause and effect.
Right.
It's about understanding those intricate feedback loops, those unpredictable ripple effects, and those ever-shifting global tides.
Absolutely. Well, we hope this deep dive has equipped you with the insights you need to navigate these uncertain waters.
Yes, we do. Remember, the Indian economy is a story that's still being written.
Right.
While we can't predict the future with certainty, understanding the key trends and forces at play can help us make more informed decisions.
Absolutely.
Whether we're investors, business owners, or simply engaged citizens.
Exactly. So stay curious, stay informed, and thank you for joining us on this deep dive.
Until next time.